Jeff Bezos once said he pays less tax than his secretary. Elon Musk once owed nothing in federal income tax. Meanwhile, you probably just cried looking at your payslip. The truth? The rich play a different game. They don't break the rules, they buy them. So today we're diving into how the rich avoid taxes, legally, the loopholes that make it possible, and what you can actually learn from them. In this video, you'll learn the 6 biggest legal tax avoidance moves billionaires love, why governments keep letting them do it, and how ordinary people can apply the same logic on a smaller scale. Stick around till the end, because once you understand these strategies, tax season won't feel quite so helpless anymore. Tax dodging didn't start with crypto bros. In the 1920s, oil barons were already funneling profits through Panama and Liechtenstein. Fast forward a century. Today, more than $11 trillion sits quietly in offshore accounts, about half the US GDP. And the best part? Most of it's perfectly legal. The reason is simple. Tax codes are so complex that only people rich enough to hire armies of accountants truly understand them. Everyone else just ticks boxes and prays. 1. Borrow, don't sell. When you or I need cash, we sell something. The rich, they borrow. Say you're worth $100 million in Tesla stock. Sell it, you owe millions in capital gains tax. But if you borrow $50 million using that stock as collateral, you get cash tax-free. The loan interest is even deductible. That's exactly how Musk funds his lifestyle while claiming to take no salary. His mansions, jets, and rockets technically finance debt. It's called buy, borrow, die. Buy assets, borrow against them, then die. Passing it all to your heirs who get a fresh tax-free valuation. The system literally rewards you for dying rich. 2. Offshore. Everything ever wonder why billionaires fall in love with the Cayman Islands, Bermuda, or Ireland? Because those sunny shores offer 0% income tax, 0% capital gains, and absolute privacy. Apple once perfected this with the double Irish with a Dutch sandwich. Profits flowed from Ireland, Netherlands, Bermuda, skipping US taxes entirely. They saved $45 billion before Congress finally closed the loophole. Even then, companies simply rewrote the game, moving HQs on paper while the real work stayed in Silicon Valley. Offshore finance is less about hiding money and more about changing its address. 3. Depreciate your way to riches. Real estate is a tax magician's hat. Buy a $5 million apartment complex, rent it out, and claim depreciation. Every year you deduct around 180Ks as if your property is losing value, even while Zillow shows it climbing. Add a 1031 exchange and you can sell it, roll the profits into a new property, and defer taxes indefinitely. Donald Trump's accountants mastered this art for decades. Paper losses, real profits, that's the dream. 4. Foundations and family trusts. When billionaires donate, they often donate to themselves. A private foundation lets them park billions tax-free while controlling how it's spent. The Bill and Melinda Gates Foundation manages over $75 billion, giving away millions but keeping its capital compounding. Then there's the Dynasty Trust, designed so family wealth skips generations without inheritance tax. Walmart heirs used them so effectively that the family's fortune grew 30-fold while paying almost nothing in estate taxes. 5. Carried interest and capital gains. This one's Wall Street's favorite. Fund managers earn carried interest, which is taxed as long-term capital gains, 20% instead of 37%. Warren Buffett wasn't exaggerating when he said his secretary pays a higher tax rate. And when critics push for reform, lobbyists simply rename the rule and slip it back into the next tax bill. 6. The insurance play. Ultra-rich families also use life insurance wrappers called private placement life insurance. They stuff investment portfolios inside insurance contracts. As long as the money stays within the policy, it grows tax-free. When they die, heirs get the proceeds without income or capital gains tax. It's the financial equivalent of hiding money in a legal force field. Now for perspective. In 2024, ProPublica estimated U.S. billionaires paid an effective rate of 8.2%. Middle-class workers averaged 15%. Morgan Stanley's wealth management division alone pulled in $28 billion last year, helping clients optimize. Globally, tax avoidance costs governments $427 billion annually, enough to eradicate extreme poverty twice. Yet every accountant will tell you the same thing. It's within the law. Of course, even the smartest billionaires sometimes fly too close to the sun. The Panama Papers leak in 2016 exposed over 11 million documents from secret offshore accounts, revealing how politicians, celebrities, and royal families quietly hid trillions from the taxman. Suddenly, what was smart planning started to look like global-scale deceit. Actor Wesley Snipes learned the hard way when his tax protester stance cost him 3 years in federal prison and a $7 million bill. And let's not forget Credit Suisse, fined for helping clients conceal more than $4 billion from the IRS through fake foundations and coded transactions. The line between clever avoidance and criminal evasion is razor thin. One step too far and you're not managing wealth anymore, you're laundering it. That's why every legitimate wealth manager will tell you, bend the rules all you want but never break them. You might not be launching rockets or hiding cash in Bermuda, but the same principles can still work in your favor. The wealthy don't just earn, they structure. Start by using retirement accounts like 401k, retirement plans, and IRAs. They're small-scale versions of billionaire tax shelters that grow money before the government touches it. Buy assets that appreciate: stocks, index funds, real estate, instead of only relying on wages. Think of every dollar you save as an employee who works for you 24/7. If you run a small business or side hustle, track expenses religiously. Your laptop, car mileage, even part of your home office can be deductions. And most importantly, stay curious. Read about tax law, investing, and personal finance like your future depends on it, because it does. Remember, the game isn't rigged. You just need to start playing by the same rules. At the end of the day, rich people don't hate taxes. They've simply learned how to dance around them. They don't wait for April to panic, they plan in January every single year. While most people trade hours for paychecks, the wealthy trade knowledge for freedom. They build systems that earn, compound, and protect their money while they sleep, and the government often rewards them for doing so. That's the real secret. It's not about avoiding taxes, it's about mastering the rules before they master you. So, what do you think? Should these loopholes be shut down, or are the rich just playing smarter in a game that anyone could learn? Let me know your thoughts in the comments below. And hey, if you learned something new today, hit that like button, subscribe for more money breakdowns, and keep watching because the next video might just change the way you think about wealth forever.